Breakthrough Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
15th of December, wonderful to be here with you. I'm Nadine Blaney, and this is the COB. So let's get across where this market looks to be finishing. The CIBO Australia Index, well, the curtains have come down on this market, off by 0.6%. We still do have a few trades going through the S&P ASX 200. Last I checked, though, down by about 60 points or 0.7% to 8,637. Sector-wise, look, we'll go through that in just a minute. Safe to say, though, we are, a bit of a moody Monday, moody market on this Monday. Also, of course, front of mind for everyone in Australia is the tragedy that unfolded in Bondi yesterday evening. So that has cast a pall, no doubt, over many out there. Look, we're watching commodities with much interest. We saw Dalian iron ore futures hitting their lowest level in quite some time. We've also seen copper drop, although gold has advanced. And we're just keeping our eye on some of the defensive positioning that's been happening as of late. In fact, look, we talked about a few defensive type stocks on today's edition of the call. You'll want to check it out. We did have a one double buy, I think that was. But we had some good technical and fundamental analysis if you'd like to give that one a watch or listen if you like, listening to this in podcast form as well. Okay, let's get across the sectors of the day, and really big boost coming through for Electro Optic Systems, DroneShield, as well as Austal. Now, EOS, I'm just going to check to see if there was any news associated with that one, because that is quite the bump up. We did see it entering an $80 million conditional high energy laser contract, so that making it to market today and really boosting that share price. Hyperion X, also one of those defense related stocks, going the other way, along with Aurora Labs. Now, copper, we mentioned that copper price did fall. Sandfire off by 1.5%, Capstone Copper down by 1.2%. But boy, I was reading a note by Jonathan Payne from the Payne Report this morning, and he's pretty bullish on copper considering the electrification of everything. He's talking about how whatever country can get cheap energy will win, I guess, the sort of AI race as well. So the US and China off to the races. Here is a look at the tech sector. So not doing too poorly when you consider it was tech that really weighed on the US market, also weighed upon Japan's Nikkei as well. Well, ASIC will impose a $150 million capital charge on the ASX, punishing it for bad behavior. Fortescue will be buying the remaining 64% of the Peruvian Alta Copper company. And Westgold Resources demerging its Reedy and Comet Gold assets into a new ASX-listed company. The initial public offering of the new firm, Valiant Gold, is planned for the March quarter. And Woolworths says that it will defend a class action in the federal court against staff underpayments. And as I mentioned, Electro Optic rising on that $80 million US deal. Neuren also having a good session as its partner Acadia wins an FDA nod for Rett syndrome's treatment. And Tyro Payments is buying AI financial platform Friday, which helps small and medium-sized businesses with cash flow. Meantime, Auckland Airport says international passenger numbers rose in October. Let's get some market analysis, make sense of it all. Jonathan Takadina from MPC Markets is here with me in studio today. Nice to see you on a Monday.
Hey, well, thanks for having me.
You're welcome. So today, a down day, no big surprise considering the lead that we had from the US. We've got a lot of data that the markets are eagerly anticipating this week.
So I think that obviously the main point that we're going to look for is the non-farm payrolls out on Wednesday this week. I think it's Wednesday their time, so our Thursday morning. And who knows what what lottery number will pop up then, because usually the non-farms, we call it the non-farms lottery back in the day when it used to move the markets. Now we've got like pretty much 2 months of data, and the last few months were kind of all mixed views. So if it's a big miss, then the markets could rally on the fact that the Fed could cut more. If it's a strong number, it could be the opposite. So at the moment, it's a wait and see moment as well. And then obviously we have the central banks meeting as well this week. So yeah, it's kind of going to be an action-packed week for the last full week before Christmas.
Yeah, I was going to say that. Never a dull moment. So when we're talking about the U.S., I was reading some analysis from State Street earlier saying that if the jobs data begins to print negatively, we will inevitably be talking about the R word, recession.
Yeah, exactly. And the tough part of it is that if you look at the actual bond market, especially the long end, the bond market is signaling that they're worried about inflation and recession fears as well. So it could be a case where the data comes out bad, the Fed signals that they're going to cut rates, but then the bond market says no, we actually still need higher yields. So they'll be stuck in between a rock and a hard place. And it's a very, very delicate dance from here.
It sure is. I mean, to your point about central banks, I mean, it's a nightmare.
Yeah.
Excuse me, for central bankers, when you've got data potentially slowing, but inflation still rolling on.
Exactly, and you can see Bank of Japan. They're in a very tough spot at the moment because they're the most indebted country in the world, and they're looking to they're worried about their inflation prints, and everyone's pricing it that they're raising rates while our market's neutral, and then the US is printing lower. So yeah, the divergence between the central banks is kind of sort of par for the course for the markets at the moment, because even though we are a week away from Christmas and kind of everyone's waiting for this Santa rally, there's a lot of worrying data out there that could push it the other way.
Yeah, and that includes what we saw from China today. Now, I don't know if you're really across it, but that's part of the reason why we saw copper pulling back from a record high. But it was the data dump with retail sales, industrial production, factory output. I mean, it was disappointing.
Yeah, absolutely. And then you've also got, don't forget, NVIDIA was allowed to sell chips into China, and they're just saying, no, we actually don't need that technology. It's not official, but basically they're saying, we actually don't need those more advanced chips. So it's kind of like a tit for tat. So China's trying to protect their own ground. You can see there's some data that's actually slowing down, because if you look at, I think, their investment numbers. So what China's been doing over the last few years to sort of smooth over their property market crashing is they've been investing a lot into their own infrastructure and factories. And that's actually been slowing down, which is actually the first time it's done in a very long time. I think it's like 15, 20 years. So we're talking about a data print that was the first time negative in a very long time. So it just shows even though China is kind of, in my opinion, ahead in the race between the USA and China, from a resources standpoint, there are concerns all over the world at the moment. So yeah, even with these markets kind of waiting for a Santa rally, and it looks like the central banks kind of have to print to get their way out of this. It just, as I said, it's not going to be an easy, just buy assets and everything goes up at one go.
Well, what about gold, though? Gold had another good session. We've got US dollar weakness. We've got slightly softer US Treasury yields. Does gold keep on keeping on?
I still think it's the easier trade of them all. In this time, and I've been saying this for a while, broken record, people say, will gold stop rallying here? And it's just basically, will that debt problem go away? And you just see it. It's not going away anytime soon. Any solutions by the central bank have consequences. Like if they cut rates too much, we could have inflation rampant. If they don't cut, the economy could slow down. So it's just, in most scenarios, unless like peace breaks out, gold should at least remain firm, if not rally from here.
Well, we can all hope for peace, particularly at this time of year, particularly today. Okay, so I was talking to my guests, David Novak and Andrew Coleman, today on the call. Catalyst Metals came up. That's a gold producer.
Yep.
Look, David was a big fan.
Yeah, so I am not across it, but I do know one of my regular viewers congratulated me for recommending it a long time back. I haven't kept an eye on it. But one that I would like to point out is Gorilla Gold.
Gorilla Gold, yep. You still like that one?
Yeah, so they actually came out with a massive mineral resource expansion today. It hasn't broken out to new highs, so I still think it's got more to go. But I think if you have a look back at sort of what Spartan Minerals did over the last, say, 3 years and until it got bought out by De Grey, I think it could be another Spartan there. So yeah, there you go. Have a look at Gorilla Gold for an upside play from here.
Yeah, all right. Thank you. Now let's just get across. It was negative right around the Asian region today. The US, I guess we're waiting for that data, but we'll be keeping a very close eye on the tech names, won't we?
Oh, absolutely. Like a lot of them have. Well, obviously the main problem is Sam Altman and OpenAI. It's like they just said, oh, we're going to spend 1.7 trillion on data centers, and people are asking, well, how are you going to fund that thing? And he's just like, well, maybe there's a government backstop. I mean, like that's not the exact words, but it was just like, and that's kind of like taking the air out of the bubble. And then now we've got, I think, Gemini 3, Grok, actually rating better than ChatGPT in terms of models. So now you can just see, especially in share price, Google's just starting to take the lead. And they've always been kind of like the tech incumbents. And now they've kind of just put the foot down. So yeah, I'm just more worried about OpenAI. I mean, like they were trying to list at, I think, a $1 trillion valuation straight off the bat. I think they'll want to get that way as soon as they can before any more hiccups come on.
Okay. Listen, so we are nearly at the end of the year. Mm-hmm. Obviously, we've got some time before the 31st. At an index level, what do you make of the technicals? How are we looking?
Flat. So I am more worried about it breaking down at this stage. So I've been using Bitcoin as a bit of a risk on and risk off indicator.
Oh, barometer,
yeah. So obviously, it's not a perfect sort of indicator, but that just doesn't look like it can get off this 90,000 level. Like, and the thing is, if you talk to, the bulls say it's different this time, but the OGs are like, it's still the halving cycle, and we are, in that sort of bearish phase. So unless Bitcoin can get above 100 fairly soon, it just feels like the rest of the market's going to at least stay flat or drift lower from here.
Wow. All right, Jonathan, it was a pleasure to have you join us. Thank you.
Thank you.
The COB, that's Jonathan Takadina from MPC Markets. All right. Stock of the day was ASX Limited. Let's hear from our experts, David Novak from Wealthwise Education and Andrew Coleman from Team Invest.
Been a big fan, especially on the chart. If you look at the trend, it's had a major sell-off since July this year. I mean, it's went from $72 down to, it's at a key support level. There it is there. It's at $54 where it is today. So this is where it needs to hold this level, but you can see the sharp sell-off there. So that's back to that previous low that it's hitting right now. That was back in October 23. So, the trend is not your friend here.
The ASX position has all of the things that you'd really want in a wonderful company, in the sense of that they've got effectively a market-controlled position, they self-regulate. I am someone who they regulate, so I'm very aware of the powers that they have afforded themselves and use quite liberally. And as a result, they can generate quite good return on equity and a very high stability of earnings. The challenge has been, and we're all talking about it today, no matter how good your moats are, they are only so good as how well management will execute on them and how much management and board are focused around maintaining them. And the ASX has really demonstrated over the last decade a complete fundamental lack of understanding of its position in the Australian landscape, whether that's regulatory or as a company on the ASX.
All right, let's get across some of these market leaders and laggards, of course. DroneShield, so real strong defense thematic happening today. DroneShield up by about 11%. Austal, it has been approved for that South Korean company to take 19.9% of it. Digico Infrastructure REIT up by 5%, so good day there. Monadelphous, and coincidence? Perhaps. Catalyst Metals up by 3%. You just heard us talking about that one. And again, it's on today's episode of The Call. Look, uranium really getting knocked about. Those companies with exposure to that theme, Deep Yellow, Boss Energy. Also seeing Liontown in the lithium space. And then there's our stock of the day, ASX, down by close to 6%. In the small to mid-cap space, there's Gorilla Gold Mines. Gosh, I like when all these circles get closed. Jonathan Takadina was just talking about it, up by 15%. And Calyx just doing that deal with Rio Tinto, sending shares close to 8% higher. Those that did not perform today, though, Conrad Asia Energy, Osmond Resources, Unico Silver, and Frontier Digital. What is happening tonight? Well, we get the U.S. NAHB Housing Market Index. The housing market has been tough in the U.S. because we've got people locked into those 30-year mortgages and not willing to refinance. The U.S. New York Empire State Manufacturing Index for the month of December is also out. It is tipped to fall. Tomorrow, we do get S&P PMIs for the month of December. RBA's Brad Jones speaks. And we get the Westpac Consumer Confidence Index for December. As far as AGMs go, Orica is meeting. All right, let's take a look at this market. And we've got a negative session coming to a close. The S&P ASX 200 at 8,635, down by 0.7%. E-minis, though, in New York and in Chicago, looking pretty good. NASDAQ E-minis up by 54 points, S&P 500 up by 18 points. But it was quite the negative session right around the Asian region. Tech coming under a bit of pressure with the Hang Seng off by 0.8%. The Kospi in South Korea down by 1.25%. Look, it's volatile out there. Please take care. Have a good night. We look forward to seeing you tomorrow.